Very good evening, ladies and gentlemen. I've watched this film for a few times, and each time I watch it and thereafter, somewhat, I had that very heavy heart, having been through the various scenes within that film itself. As you notice on that film, there are a few characters. Actually, there are two accounting firms involved, and the restaurant owner, that is their client. So by and large, that is what it is. So you have three parties: the restaurant owner, accounting firm number one, then accounting firm number two that takes care of the payroll service. Then, of course, there's a fourth character, the law enforcement agent. So you have got the restaurant, that is their client, accounting firm one, accounting firm two, then the law enforcement agent. So I thought I just want to give that very quick setting before I go into the discussion and the seminar, not so much of seminar, but the conference panel proper. Let me just quickly introduce myself. My name is Ernest Khan, and I actually, for this conference, I have a lot of feeling for this conference because I first came to this conference as a speaker some 20 years ago. The year was 2003. I was then the vice president of the National Accounting Body in Singapore, then it's called ICPAS. I was also an AFA Council member, so I spoke at the 2003 AFA Conference in Bangkok, exactly 20 years ago. 2 years later, 2005, it was held in Hanoi. So I spoke in Hanoi in 2005. 2007, it went to Jakarta. I spoke in Jakarta as well in 2007. 2009, it went to Brunei. I was also in Brunei. I spoke in Brunei. And that was a long time ago. It probably shows my age also. So I feel very excited and very honored to be back here some 20 years later on this platform for the AFA Conference, the 23rd edition, as against the 13th edition when I first spoke in Bangkok some 20 years ago. So that is my very brief background. Now I just want to introduce my panel here. If you allow me, I think for that I need to take up my reading glass. And as I said, probably you know how old I am now. I need to read with my reading glass. To my right, Kun Areewan Aimdilokwong is currently the Assistant Secretary General of the Security and Exchange Commission of Thailand, SEC Thailand. She oversees the accounting and auditing supervision function, which includes the Financial Reporting Oversight Department and the Audit Oversight Department of the SEC Thailand. Prior to joining SEC Thailand, she spent several years working as an auditor and internal auditor in one of the Big Four accounting firms and a large listed company, respectively. So someone very, very esteemed, a regulator, but prior to that, had professional practice experience. Next to her is Mr. Yeong Seng. Yeong Seng is the founder and managing partner of KLP LLP. Yeong Seng started the firm, or rather his firm, in 1999, and is today a 50-staff strong audit and accounting firm in Singapore. With more than 30 years of experience in audit, corporate recovery, tax, secretarial, finance, and administration, Yeong Seng has cross-functional skills which enable him to assist clients in various ways. So a practitioner, audit and financial advisory, corporate secretarial practitioner. Next, to the right of Mr. Lim, is Kun Sudwin Panyawongkhanti, is the chair of Ethics Standard Setting Subcommittee of TFAC. He is also an independent director and audit committee in Charon Industry Company Limited and Thailand Iron Works PCL. He has more than 30 years of experience in accounting and auditing. Also someone with auditing, accounting background, has been, I guess, seen through many clients at his work when he told me he was then a PwC partner. And now at corporate level, serving as independent director of listed companies on the Thailand Stock Exchange. And of course, he's also the chair of the Ethics Standard Committee, subcommittee in TFAC. So I've got a very esteemed list of panelists here. Now, what I'm going to do, oh, sorry, I was just reminded that, you know, on this session, I've got somebody online. Sorry, Jeff. Now I think I can see you, because initially they said, you know, I would be sitting over there, so I wasn't very sure. So they put me over here. Now that, okay, Jeff, I can see you. I'm so sorry. I nearly have forgotten you, but I'm glad to be reminded. Yes, Mr. Jeff Kwan is the director of the International Ethics Standards Board, IFAC. Geoff Kwan joined the IESBA technical team in 2017 and currently serves as a director. He currently leads the development of IESBA's strategy and work plan 2024 to 2027 and oversees IESBA's consultative advisory group and national standard steering liaison group meetings. He also conducts stakeholder outreaches globally to promote the IESBA code. So welcome. Thank you, Jeff, for dialing in all the way from Australia. Okay, for this segment, what I will do is, you know, there's going to be in 2 to 3 parts. What I mean by that is, the first part, I'll ask my panelists' impression of the film, All Too Familiar, we just saw. Then after that, I'll move into the Q&A, basically asking specific questions directed to the panelists. Now then, I would theoretically be opening to the floor in my third segment, but I noticed that, you know, many of you, if you don't ask live questions, you would then write your questions down and submit. And of course, we have got some live audience via the Zoom. So again, there will be questions that will be filling in through the Zoom as well. And I believe I am able to see it from the screen. So that's how I'm going to run it, you know, for the next maybe 50, 60 minutes or so, depending on how it goes. So with that, you know, I would then kind of want to start off with this headline. Now, the film itself deal with a number of segments, one of which is on AML, that is anti-money laundering. Anti-money laundering is a big subject these days. Now, I thought just want to kickstart, I want to read this, one of the latest news to you. Now, you have heard of, you know, big ticket item like AI, ChatGPT, and I'm also sure you have heard of cryptocurrency and cryptocurrency exchange, the like of the FTX that was in trouble. And, you know, before you know it, there's just another one. This news was featured as recent as Tuesday. That was just 4 or 5 days ago. Let me read this out to you. The headline here says, Binance. Binance, by the way, is a cryptocurrency exchange. Binance to pay billions in US in money laundering case, CEO resigns. So there's a headline. Only came up Tuesday, like 5 days ago. Now then it says very briefly here, as I quote from the press, Binance Chief Executive Changpeng Zhao pleaded guilty on Tuesday to U.S. money laundering charges in a deal that will see the cryptocurrency exchange he founded pay over $4 billion in penalties. $4 billion. The Attorney General Merrick Garland said in a statement, Binance became the world's largest cryptocurrency exchange in part because of the crimes it committed. Now it is paying one of the largest corporate penalties in US history. And I further quote, its willful failures allowed money to flow to terrorists, cyber criminals, and child abusers through its platform. And this platform, they say, they failed to report suspicious transactions. This is a live case, a real case, just taken to task 5 days ago in the news, and this is only part one. There will be more unfolding in the months to come, because this is only a fine to that company. But what about himself personally? So there will be a series of things coming up in the months to come. Watch that space. Now I want to start off with this because as we watch this film, there's an element of any money laundering aspect. Of course, probably not to the scale of 4 billion or multi-billion, but also there are some money. And we have seen some consequences like that, you know, for one of these recent cases in the US. So I thought I just want to, you know, go back to that film. And the first area that I would like to, you know, deal with is the suspicious activity reporting, SAR. In some jurisdictions, they call that STR, suspicious transactions reporting, STR. So SAR, STR. So in the film, you know, you have seen that second accounting firm lady who made that report to the law enforcement agent, the police. Then that's where they started the investigation. They came to the accounting firm number 1 to seize the record, and then they went to the restaurant to make the arrest. So in that aspect, I have this question for Kun Areewan. Yeah, as I know you are a regulator, you know, SEC Thailand. And of course, regulator deal with, you know, in this particular aspect is listed companies and all that. I'm just wondering, you know, as a regulator, I know that this question may not have a direct answer. As a regulator, is there an expectation, you know, of either you are listed companies or for that matter, the professional service firms serving that listed company, or even for that matter, whistleblower from whoever who come to know something suspicious about that company. Is there an expectation from a regulator per se? I don't know whether this question is too direct. I'm sure you have other ways of answering it.
Let me start out with a standard disclaimer that opinions that I expressed today is my own and not in relation to the SEC Thailand office. In terms of expectation, let me talk about the auditors first, because I think that's the most obvious that is stated in our Securities and Exchange Act. In one of the sections, I'm not going to name the number of the sections, in one of the sections of the Securities and Exchange Act, it stated that as an auditor of a company, and by this means it's mainly related to listed companies, if you're an auditor of the listed companies and you found something suspicious, you are required by law to report it to audit committees. And the audit committee is then required to do investigation, and within 30 days, are required to report to the SEC their preliminary investigation into the suspicious matters that was reported by the auditors. If the audit committee doesn't report to the SEC within the 30 days, then it becomes the auditor's responsibility to report to the SEC. But recently, with the news that we have, the things that happens in our exchange, recently we did issue a letter to all the audit committees that even though the laws require that they report within 30 days, but we request that they voluntarily report as soon as they receive the report from the auditors, that they report to the SEC, so that in case that that matter needs immediate attention, then we could start doing things without, without those 30 days lacking time. And for others, like directors and management, they do have under law, under the requirement of the law, they do have the duties to provide due care and fiduciary duties of their work. But for other professionals in business, like the accountants within the firms, there's no specific rules or regulations require them to report. But we do have a channels for them to report to the SEC, and if they afraid of something that would happen, they could report it anonymously without stating their name or their contact information. As long as they provide enough information for us to work further, then we would be appreciative of that. Wouldn't say that. I think as a regulator, I think we do want people who are aware of suspicious activities to report it to us. I mean, if it belongs to the listed companies and it's under our laws, our remit, then we would like them to report it to us. And they also have they also have responsibilities under other laws as well to report to other regulators.
Thank you. I just thought I wanted to start with that first, since I cited this example of Binance cryptocurrency exchange. But before I move on to the next question, I want to come back to the film, because this film is like 16, 17 minutes. It's titled All Too Familiar. Certainly, there are different aspects in the film that need us to pay attention. Being too familiar with something as your client, when your client have got new investor, would have blinded us to think that, oh, it's okay because I know the client so well, but forgetting that there's a new investor coming on board, that a further due diligence probably is necessary. So let me just come back to the film. On that, coming back to the film, I want to go around each of my panelists to ask them of their impression of the film. What did they notice that they think is worth for us, as a lesson learned, and whether there's consequence. So for that, I probably start with, Yeong Seng first.
Sure. Thank you. Okay. To me, when I look at the film, my focus was really on Riley. Riley is the partner of the second accounting firm, right? And just too often, a lot of us, especially in Asia, we have a lot of what we call relationship, right? So what she did in the first instance is because Jack referred the work to her, and being a bigger firm, being a more established firm, like for example, if KPMG or PwC or EY or Deloitte is doing something and referring part of the job to you, you say, oh, probably they have a system and we can rely on them. Or you have a good friend. And then what you do, you say, okay, never mind, let's not check or let's check later. Sometimes when you say check later, it never gets checked, right? So that was probably at the end of the day her mistake, okay? I think we should go by in God we trust, everyone else we must check. Then after that, one of the other things that I looked at it and I liked it was when they went to the restaurant and they saw that the place was quite empty. Unlike Jack, Riley started getting suspicious. She looked at it and said, is it logical? Is it logical for them to be doing so well when the restaurant is empty? Okay. That is what we as accountants need to do. Have the skepticism. We need to be able to be skeptical and say, you know, I'm a Teochew, we say, Tiobo, you know, is it correct or not? That's the case, right? And then after that, she went back to check. Okay, the private room, she called for the private room, she couldn't find it. She did her own check, and as a result of her own check, she was the one that filed the suspicion. Okay, for us, we call it STR, Suspicious Transaction Report. But this one is SAR, okay? So, which is Suspicious Activity Report. And that was what more or less kickstart the whole thing. And I'm sure whether in Singapore or in a lot of places, what started off investigation is the STRs that are required to be filed by the financial institutions, by the accountants, to the authorities, which kickstarts a suspicious transaction, which is then investigated, and which then boils down to legal, what called criminal action against them. So to me, Riley did the right thing at the end. Did she do the right thing at the start? Probably not. Okay.
Thank you, Yeong Seng. Maybe I turn over to Kun Sudwin now. Your impression of the film?
Well, I think the film is very good, a very good training film for in the context of professionals in public accounting practice. I think it reminds me back to the process that we have in the risk management process. What is the ANC acceptance and continuance, why it's important? It consists of a lot of questions in the questionnaire, but it did contribute a lot of benefit if we really complete it fully, right? It also reminds me to the process of partner rotation, not to get too familiar with the client, so that we can have a fresh perspective on the client, right? It also reminds me to the process that we have a concurring partner or second partner review, that a new thought coming into the process so that we won't get into wrong opinion, right? So this kind of thing is just remind me that, and then I feel that this film is very good for spread out to the profession. In the context of PAIB, right? Public accountant in the professional accountant in business, as I am in myself in the independent directors. I think this film taught me how to go deeper when we were in the meeting. When the company have new transaction coming in, discuss things, right? Mostly, we need to understand more, not just during the time of the meeting, because it's very short. The meeting just, the longest maybe just one day, right? But within that one day, we cannot understand the whole things. So this film really teach me how to, in the sense that we have to get to the state of thorough understanding of the transaction and also the people involved in that transaction. That is my impression.
Thank you. I think that is quite insightful. Maybe now let me turn to Geoffrey. Your impression of the film?
Sure. Thank you first for inviting me to speak with you today, representing IASPA. Of course, this is a global standard setter on ethics for professional accountants. Like what my previous panelists have said already, I think this film has just packed full of a lot of really good examples of ethical issues. And I'm glad that we've watched it. I'm glad that you have a session on ethics and governance, because I think it's a demonstration of your recognition of the importance of ethics when it comes to your work and when it comes to all of you as part of the accountancy profession. I think, when I watched it a couple of times, a few times, and it really, reminds me of the profession's responsibility to act in the public interest. So you have, as professional accountants, not only the responsibility to act for the best interest of your clients, but indeed you have an opportunity and responsibility to act in the public interest. And think about the access of information that you have as professional accountants. Traditionally the financial data, but of course increasingly the non-financial data and data such as those of sustainability. So as a profession, you play a really key role in terms of preventing and identifying economic crimes and fraud. And I think this video kind of is a good example to demonstrate that often some of the biggest issues, the issues that could potentially sink you, your firm, really are impacting the profession in a negative way. It's not about your lack of technical knowledge. It's about lack of ethics. It's about not acting in an ethical way. And I think this story tells us, it's not just about the high-profile cases, but whether it's a small firm, medium-sized firm, or one of the larger firms, ethics and behaving ethically is really important. I know that we're going to unpack this a little bit more. So I will just, as I was watching this again, I was really taken by the last comment. I think that the character Riley has is, when she said, well, were you only surprised, but not suspicious? I think that's a really good comment because as we've heard earlier already, that I think the objectivity, certainly at least the first accountant, almost the entire journey, he was very much affected by familiarity, self-interest, because he wanted to have more, perhaps even businesses with the cousin. And, and really, as a result, he was not being objective. As a result, he was not having the right mindset to perhaps ask the right questions and to follow through. So those are some of my initial thoughts, but looking forward to the discussions in the next few moments.
Yeah, indeed, the point on, surprised and not suspicious raised by Jack, the partner of the first accounting firm, is something, a good reminder for many of us, especially in the professional accounting firm service, as a service provider, because quite often we may be surprised by this and that, but are we really suspicious enough? But of course, when it comes to suspicion, it's always a very tricky subject because it's also based on trust, or for that matter, not trusting. If this has been your client for some time, like in this case, just because of a new shareholder or new investors added to the existing company, are you then raising a lot of suspicion and all that? So I think it's always very tricky. But I would urge you, shortly, if you have any questions around that area, do post it. Either you write it down or you ask live questions, to our team of esteemed expert panelists. Okay, last but not least, let me turn to, this time I haven't forgotten, Areewan, about your impression of the film.
Thank you. Last but not least, well, when I watched this film, I watched it a couple of times. I think two words come to mind. One is familiarity, and the second one is confirmation bias. I think for the first one, familiarity, I think even though the film seems to be, it seems like they're produced in a UK context, but I think it could be more prevalent in ASEAN culture, because I have heard a few people mention that, in doing business in this region, know-how is not as important as know-who. So when you use your relationship to get in business, you might feel like you cannot ask some questions that you should have asked. And I think that that could be a very dangerous territory to get into. Once you get in a business, I think it doesn't matter how you get in business, whether how you know that person, how long you know them, or which context, they could be your relative who bring in business, they could be your long-term client, they could be your kindergarten friends. It doesn't really matter, because when you get into trouble, they not get into trouble with you. So I think you cannot have anything get into your way of performing your due care as a professionals. And this is where I get to the second part. I think it rings a bell to me when I watch this movie, is confirmation bias. I think for Jack and for Riley, and for Riley's subordinates, her team, there was a lady and a gentleman there. The gentleman in her team, of Riley's team, saw a few red flags. I think Jack's team saw not really a red flag, but they know that there's a process they're supposed to do, but because Jack said it's okay, so she didn't perform them. So along the movie, there are a few red flags here and there. But for everyone, especially for Jack, because he thinks it's not a big deal, it's okay, so he skipped the process that he should have his team do. And for Riley and her team as well, there's I think there's red flags there when the gentleman who lead the team to do the HR service there, that everyone pays the same pay scale, some money put in the same share bank account, but everything was explained away. I think in this way it's because, I don't know, maybe it started out with because you know this person for so long. Because if you start being suspicious and you dig more, then instead of finishing your work, then you have to put in extra hours and do something else. So if you start out with a mentality that you want to believe your client, then whatever they explain to you, then you're gonna believe it. And I think this part is kind of similar to confirmation bias, that you start out with, you want to believe the person. So whatever they say back to you, then you're gonna believe it. And I think there's some of the cases that we found in the past with the auditors, they actually found something, or the information that they received should ring a bell to them, but because they were satisfied with the explanation put out by management, they didn't do further check. They didn't go dig and get the document to substantiate what was being explained by the management. I think that was the pitfall that we see time and again.
In fact, I really like the point you make, Kun, Areewan, about familiarity. Indeed, in the film, you saw that, this particular client earned by Riley, the second accounting firm, that lady, actually herself, Riley, and the first accounting firm partner, Jack, they were college friends. So it's how familiar they are with one another. I'm sure there's a lot of trust between the two. So I think sometimes, with that familiarity, you say, then do I need to go and do further check? So that's number one. The other familiarity is like, Jack and his client, the restaurant, the point early, Yeong Seng earlier make, the fact that is my existing client. So I think, I just want to probably also refer back to this point about, the fact that in our environment, again, the point that Kun Areewan make, in our culture in Asia, when you know somebody so well, especially your existing client for so many years, it's like quite insulting to start asking a lot of questions because, your client will feel, what's wrong with you? Do you not trust me? And that is a very powerful word. If not, it's a very sharp word. Do you not trust me? So I think, these are the issues that I'm sure, professionals are facing It's not only a problem for yesterday, it's a problem, challenge for today and in the future as well. So I think it's a very good observation, Mac, on that film. Now, having asked the panelists, on their impression about this film, and also I raised an earlier questions about the suspicious, you call it either suspicious transaction reporting or suspicious activity reporting, SAR or STR. I've got somewhat that similar topic, but this time I probably want to refer these questions to, Kun Sudwin, and that is, from your experience as a practitioner before when you were in PwC, of course now you are an ID of a listed company. How does making SAR alter your professional responsibility, if at all? In your case, the professional responsibility when you were a partner in PwC, and now also a professional duty as a director of a listed company. Yeah.
I think the professional responsibility when I work in PwC, I think the SAR is not an obstacle, right? It's our responsibility to report, to get the facts out from the transaction, right? So I try, to my view, SAR actually help the professional to do their work better because they have this as a standard to comply. So they have to do every step of work with care, with due ethical care as well, right? So I think in asking, before we reporting, in asking the question, to my personal view, it's not about the trust. When we ask the client, doesn't mean that we don't trust them, but we are asking for evidence instead. I separate trust and evidence is different. Because our duty is to collect evidence as auditors, we have to collect evidence. So that I usually ask them that I trust them, but I need evidence. I need understanding and evidence for that answer to support that understanding as well. So I'm pretty happy with the SAR when I do that one. But in terms of in the context of the ID, it's different because we are in the group of directors, right? So we still have to ask a lot of questions. It's our duty as ID to ask the question and get thorough understanding of the transaction. And especially when there is something come in from outside with we don't know well about that party, then that is our duty to ask questions, right? So I think I look at the SAR as tools to remind my duty, to remind my responsibility, rather than a problem or thing like this. Yeah.
Okay, thank you. I now want to move over to another area. Again, something that we have been talking about also. And that is familiarity and lack of professional skepticism. I want to raise this question to Geoffrey, but after that, there is probably a follow-on question because I've seen one question, from the audience already. That question, I guess, is better addressed by the standard setter, but let me ask the standard setter a separate question first now. So to you, Geoffrey, how do international ethics standards deal with this significant area? When it comes to, familiarity or lack of professional skepticism, how is it been dealt with so far in this aspect? Geoffrey?
Thank you, Ernest, for that question. I actually just raised my hand for the previous question as well. I think it would be remiss of me if I did not talk about the NOCLA provisions in our code, which is responding to non-compliance with laws and regulations. And it talks about certainly professional accountants' responsibility to comply with laws and regulations. So it includes reporting suspicious activity if it's required by law. But it really highlights the profession's responsibility to act in the public interest. It really demonstrates that professional accountants need to do more and to think about who they need to communicate non-compliance with laws and regulations or suspicious NOCLA. First, of course, to management and those charged with governance. And then again, think through whether further actions are required. And this is, a section both for those in public practice, so whether you work in a firm, as an auditor or in other areas in consulting, or whether you are professional accountants in business. So just want to put it out there and just remind the audience the importance of these two particular sections. But Ernest, coming back to this question about familiarity and perhaps lack of professional skepticism, perhaps if I just look at familiarity first, if I could just take a step back. When you look at the IASB code and code of ethics for professional accountants, it does have a building block approach, which means that it starts with a fundamental block. Which has the 5 fundamental principles: integrity, objectivity, professional competence, and due care, confidentiality, and professional behavior. And then it looks at the different threats to compliance with these fundamental principles. And we have self-interest, self-review, advocacy, familiarity, and intimidation. As we've heard already, we can see what's coming loud and clear from this example is the familiarity issue. The familiarity threat, I think, to those accountants exercising or compliance with the fundamental principle, principally to objectivity. In the code, we defined familiarity threat as the threat that's due to long or close relationship with the client or employing organization, and a professional accountant will be too sympathetic to the interests or to accepting of their work, which is essentially what you have seen in this example. So in our code, we talked about applying conceptual framework, which means that you need to really identify and then evaluate and address the threat. So in this case, if they were doing the right thing, they would be looking at, whether, what is the corporate governance structure, which of course, in this case, the client doesn't really have much because it's a small business. And then you look at the client's operating environment and then your own firm's operating environment. And then, for instance, look at how you address it. We've heard earlier from, I think, one of the panelists talking about, perhaps you need to have, another reviewer to look at how you've, dealt with, your work. So I would say that in this case, like I mentioned earlier, there's, certainly familiarity threats to, as I've mentioned before, fundamental principle or compliance with the fundamental principle of objectivity, but I would also say that there's threats to with the compliance with the fundamental principles of professional competence and due care, particularly the due care component. But I would also add that in addition to familiarity threats that certainly coming out loud and clear, when you watch the film, certain comments, make you realize that there's also a bit of self-interest threats as well, particularly in the sense of wanting to build a business, get more business. So that's something to think about. In terms of familiarity threat, maybe it's not so much in the story that we've seen, because I don't think both of them were auditors. But if you were auditors, of course, our code would address that in section 540 of our code, which deals with long association. And so we have a whole section on that when it comes to auditor and familiarity threats. In terms of professional skepticism, in the code, of course, if you're an auditor, or certainly if you're in the accounting profession, you would know there's quite a term of art that is being used in auditing standards such as those from our sister board IWSB, and is defined in their auditing standards as well. In our code, we don't use the term professional skepticism because we don't just deal with auditors, of course, but we do use a broader term, which is having an inquiring mind. Now, I've talked a bit earlier about as part of the code, as part of the building block, you need to apply the conceptual framework. And part of applying the conceptual framework is this element of having an inquiring mind. And the other two elements is exercising professional judgment and using a third-party test. So in this case, you've heard, when you when you watch the video, and I think we've heard earlier as well, is the second accountant, Riley, she's really towards the end, perhaps a little late, is really just starting to apply that inquiring mind. Having a proper understanding of the facts and circumstances, considering the source, the sufficiency of the information, the fact that they have never done this AWL check, that's something that should have, made them kind of keep, I guess, asking and checking, because, then that's very much part of having an inquiring mind. So the code certainly very much addressed, the issues we've seen in the video in terms of familiarity, and I guess in terms of the need and importance of having an inquiring mind for all professional accountants, whether you work in a firm or whether you work in a business or other organizations.
Thank you, Geoffrey. This subject of familiarity and lack of professional skepticism in this film, all too familiar. By the way, this is the third ICAEW film, all too familiar. And the focus on this film is more on anti-money laundering. And of course, the subject of lack of professional skepticism has come out quite strongly. But beyond that, the Institute also has produced two other films earlier. The first one was False Assurance. False Assurance, the film #1, produced by ICAEW quite a few years back, was on audit, because it's false assurance on audit assurance. The subject of familiarity also popped up in that film #1. Film #2, produced by ICAEW, Without Question. The Without Questions film focus more on the capital market. A company that has grown, going to the capital market, try to raise funds. Again, the professional service providers got themselves into trouble because of lack of professional skepticism. So there's a second film. And here is a third one, anti-money laundering, but the subject pops up. So almost in every single training film, that subject pops up. For those of you who are keen for your training, either for your staff, do come to us, ICAEW. I've got my regional director, Elaine Hong, whom you can contact, that we would like to assist you as much as you can if you need support in this area. Sorry, I was going a little bit off tangent. Let me come back to this. Still, Geoffrey, I said there's a follow-up question. This is a question from online. Let me read the question out to you. The question is, retail investors nowadays invest in the stock market. However, due to certain fraudulent cases incurred, and it was found that some financial statements are unreliable or misrepresented. Therefore, retail investors like us are not confident of the audited financial statements. The question is, how to regain confidence and ensure that the published financial statements are fairly presented according to the accounting standards and were audited corresponding to the auditing standard. I pose to you first on the standard setters perspective. Of course, this is also a question for my fellow panelists here if later they want to comment. So maybe I turn to you first. You get the question?
Yes, thank you
Yep.
for giving me the opportunity to respond first. Look, I will respond, of course, from an ethics standard status perspective. I know that around we have Chongwei representing the auditing standards. Of course, they play a really significant role in terms of the assurance of the financial information. Of course, there are reporting standards that as well. But I would say in terms of gaining trust, and that's something that our board really promote very strongly to our stakeholders, not so much the ones in the profession because they already sort of know, but also to other stakeholders, the importance of ethical behavior. We really believe that to have public trust in the work of the profession, whether it's in consulting or in terms of reporting of financial, non-financial information, or in the assurance of the information reported. It is really important that we are able to demonstrate that we have acted ethically, because I think ethics really is the cornerstone of trust. And that's something that, on our board, we focus very strongly on. We have seen, for instance, recently, certainly in my jurisdiction of Australia, we have seen some issues with allegations of tax frauds in the consulting world. And ultimately, it's not about technical issues. It is about ethical behavior. It is about firm culture, firm governance, tone at the top. And I think it is very important that firms take a much more reflective look and really have a strong focus on ethics to build that trust, to maintain that trust, and to build that trust. And I think from an investor's perspective, they need to be able to see that. And I would certainly very much, and also for those who are working in organizations, you may be a PAIB, professional accountants in business. I would encourage you that you have a responsibility to make sure there is to promote the ethical culture. And another thing I would say, to try and build confidence, from the public, not just investors, just general public, customers, consumers, including the employees, to build that public trust. It's important that one of our fundamental principle is the fundamental principle of integrity. It means that essentially you need to have that courage to do the right thing, even though it may create adverse impact on your organization, your firm, or on yourself. So I think from an ethics standard setting perspective, that's probably, I would say.
Okay, courage to do the right thing, absolutely. Maybe I ask Yeong Seng, do you want to address this as a practitioner?
Okay. I guess at the end of the day, as a practitioner, there are a lot of files, there's a lot of deadlines, there's a lot of things coming through. So what we can say is that there is a system is in place. Essentially, if you do your audit properly, you should have found out, right? So in the busyness of trying to audit the files, people tend to lose their alertness, their skepticism, and as a result, skip certain things, and really at the end of the day, that's when accounts get misstated, the accounts are not true and fair. Sometimes even the information coming in is not coming in on time, and as a result, there's time pressure. And lastly, I must say, especially to owners and stuff like that, if you think that your staff is just going to be there for a short while, then think again, because training of your staff is so important, because the more educated and the more alert the the people on the ground doing the work is, the better will be your audit. There's no way for an audit partner to be able to see everything. You rely on a team, and how strong that team is how strong you're going to have in terms of the quality of the audit. And that's where I think the emphasis of training, capability is very important.
Thank you. I know that there are still a couple more questions from the online, but let me ask a separate question because I want to move to the next topic. That is customer due diligence and risk assessment. Now, for this question, let me turn to Kun Sudwin. You know that for CDD, there is customer due diligence that is not unknown or unfamiliar with professionals. We know that we have to do customer due diligence. Just as much as, in the film you saw that, the two accounting firms know that they have to do. But, there are so many other evolving circumstances. Obviously, for audit appointment, probably is somewhat straightforward. But there are other types of appointment, like in this case, you get payroll services. So actually, from your experience, to what extent you think doing a customer due diligence is considered sufficient, if there is sufficiency, of CDD?
Well, I think in the process itself, they ask us to do normally the risk management process will ask us to do the due diligence at the beginning and at the end, right? But in reality, whenever there is some transaction that we are not familiar happened during the engagement time, we need to do that. And we need to reconsider the due diligence that we have done before, whether it is sufficient, it is overlooked something or not, right? So I think the process is actually, all the way from the beginning till the end. There is no specific time that you have to do this, only this, because the transaction, the event will be, the incident will be changed or moving around from the beginning to the end, right? I think you can stop do your due diligence only when you finish your work. That is too late to do anyway.
But it's too late, right? In the movie, it was far too late. Yeah.
Right, but that's too late. So I would suggest that we do all the time. We have to be alert, like Yeong said, we have to alert all the time during the engagement performance.
Yeong Seng, anything to add to this?
No, I think at the end of the day, that has really been covered on this issue. Yeah. There's this question here. Can I address that?
Can.
There's this question here. I'm going to read it. How can we leverage technology to help address some of the issues identified in the movie discussed by the panel? Okay, let me look at the movie and say, where were the red flags that was indicated? There were two big red flags, right? One of them was actually done by the second firm, where the junior staff was saying, hey, how come payroll, there's high turnover, and not only high turnover, people were all paid the same salary, right? And some of the staff were paid into the same account. That will be one red flag, because as far as the auditors is concerned, a chef cannot be paid the same as a waiter and all that. And to be able to pay into one account becomes a danger. Okay, in audit, we have actually softwares. We do a search and we trace to make sure that the accounts are all unique. And therefore,
data analytics, right?
Yes, we do data analytics. We do comparison. We use Power Query to be able to check to make sure that they're unique numbers. And therefore, if this went through an audit, this would be flagged out and say, hey, how come they are the same? And questions need to be answered.
Question for you here, but this guy is not doing audit, they are doing payroll service.
Right, and that's where I say alertness of your staff is important, because the junior staff doesn't know, but the more senior ones, not the partner itself, but the second layer must actually have known, hey, this is not correct, rather than to say, well, new business, new owners. That was the mistake. The second one basically was the fact that in the first firm, they found, hey, you know, over a few months, salary, what you call the sales have gone up. Busy. Sometimes it's good news, but you must check to say, how did that occur? Okay, and you need to do that query and be suspicious over it and say, okay, be skeptical, not suspicious, skeptical over it, and say, how did it move forward? And that is another area whereby we do what called data mining, whereby, you know, you actually then try to look at accounts and say, hey, okay, how can I data mine to make sure that the answers are reasonable? How can I deal with it? And audit is moving into data mining in the future, whereby we're not really looking at just a bit of samples, you know, but rather to be able to say, let's look at the whole financial statements, maybe not sampling, but let's look at the whole financial statement and say, is it logical? Can the thing substantiate it such that, right, the figures are correct and verifiable?
Yeah. Okay, there's anybody else want to address this?
Ernest, if I
Yeah,
could,
sure, Geoffrey.
just add a quick point. Just back to your original question, I just want to point out to our audience that the IASB will, of course, address specifically professional appointment in Section 320 of a code. And exactly what our panelists have discussed is that when you accept a new appointment like the second Riley and her firm, and also if it's an existing client, you should periodically review whether to continue with the engagement. So again, it tells you basically from an ethics perspective, you do need to continue to question and look at things and whether there's any things that would stop you from taking the engagement. In terms of technology, I don't have a lot to add, but I do want to say that our board has a big focus on technology, and same as the IWSB as well, because we recognize the importance of technology as a really pervasive issue. And I would say that for those who are in the accounting profession, don't be afraid of technology. It can be used to really help you. Because what technology can't do, and it really highlights, is the professional accountant's ability and the skills in making professional judgment. And I think technology should be there to help you make professional judgment, to help you apply in our case, in terms of ethics, the compliance framework. Thank you.
Thank you. In the interest of time, I want to move very quickly into this last area, that is interaction with law enforcement. Maybe this question I would like to ask Kun, Areewan. We have seen SAR, just now in the film. And of course, there could be other things as well when it comes to law enforcement. I know that you are from, more of SEC Thailand. It's not so much of like, in Singapore, we call that the police or the commercial affairs department to investigate. But in any case, what is your thought around, law enforcement when it comes to an activity that need to be reported? Yeah.
Well, I would just say in general, not specifically about law enforcement, but I think in the movie that it was, even later on, after the police officer came into Jack's office and confiscated his documents and everything. And then he went and talked to Riley. And Riley presented him with the information that she got on just the internet basic check, and said that that the new partner was suspicious of human trafficking and everything. I think Jack was still trying to rationalize away, but he wasn't charged. Like his charge was folded. And I think that was because he knew that he's supposed to do something, but he didn't do it. But now that things happened, he was trying to say that, even if I do checked, then he wasn't charged with those charges. So I think, but I think even if even if you fail to do something up front, but you become aware of it later on in the process, I think I would probably use the mentality of better be late than never. That as long as you're aware, you might be negligent up front by forgetting to do something, something got in the way, you didn't do what you're supposed to do. But as soon as you're aware of something being suspicious, I think it's better to notify authorities that you're supposed to, depending on what is that suspicious item is about. If you ignore it, I mean, if Riley wasn't aware of the wrongdoings and it was Jack who was, because at the restaurant you will see that Jack seems to be suspicious about Mika and the restaurant. But later on, when he leave the restaurant, he didn't do anything else. He didn't call back, he didn't do any further check, even though he seems very suspicious at the restaurant. I don't know, maybe because he didn't do things that he's supposed to did in way back. And if he started digging, then it would become, and he reported it. I think if he could bury it away, he would probably do it. But because, but I think in that way, now that somebody else reported it, it potentially could be that he was, from the law enforcement point of view, he could become aiding and abetting of the wrongdoers, or colluding with the wrongdoers. So there might be that view from the law enforcement point of view, that if you're aware of something and you have legal requirement to report it, but because you're afraid that something bad would happen to you, I mean, because you didn't do your duty when you're supposed to do it, so you're trying to bury it away. But I don't think there's really a secret that you could keep forever. It would come out eventually. So if you're aware of something, better report it later than never.
Thank you. In fact, I left with literally no time on the clock. The subject, this afternoon is fostering an ethical culture in business. And of course, our film is all too familiar. Let me just ask the panelists their closing thought, maybe in less than a minute, their closing thought, on this subject.
I think in terms of the ethical and governance, for the ethicals, I would urge or encourage people to perform their work with integrity, maintain their objectivities and independence. I think with these three, you can prevent a lot of wrongdoing in your works.
Okay,
Yeah.
so objectivity, independence. Yeah.
Okay, for me, really, at the end of the day, this is all about risk management. Okay, and risk management has two aspects. One is the risk management of the client, where you do your risk assessment. The second one, which a lot of people don't say, is risk management of yourself. A lot of you are accountants. Some of you spend many years to get an accounting degree, accounting qualification, right? What is a risk? What is a risk if something goes wrong and your name is there, right? It can go down the drain. I mean, I'm a chartered accountant, so I don't want to speak about chartered accountants, but in Singapore, okay, bankers have been caught not filing the STRs, and fines of 10,000 to 100,000 is there. and you get anything involved, you go to jail. Now, other countries may not be that strict. But if you look at Singapore and the risk of a professional not doing the right thing, getting caught and getting their reputation and financial status downgraded, I think the importance is there. That personally, it's your interest to make sure things are done right.
So don't get fined, don't go to jail. That's what he's saying, yeah, okay.
Okay. You can, well, for me, you can trust people, but it's still your job to verify whether what they said could be substantiated or not.
Thank you. Jeff, over to you.
Thank you. Just a couple of very quick thoughts. Firstly, public trust, I think in your work, as I've mentioned, is very much underpinned by how you behave or how your firm behaves ethically. Another thing is I would really encourage you to proactively establish and build an ethics culture in your firm. And if you're working in an organization, an ethics culture in your organization, because you have a responsibility to act in the public interest. So it's not just about what's best for your clients or how much money you make, but you have a responsibility to act for the public and in the public's interest. Thank you.
Thank you, panelists. I hope you have enjoyed not only the film, but also, this chatting session amongst the panelists. Let's put our head together to thank our group of esteemed experts here. Thank you very much.